Hello, and welcome to today's webinar hosted by Red Badger in partnership with Adyen. I'm Jimmy Taylor, Business Development Director at Red Badger, and I will be your host today. We've got just under an hour allocated for the webinar, and for those of you who are joining live, please do ask any questions using the Q&A functionality within Zoom, and we'll try and answer as we go along. So kicking off with a quick introduction to Red Badger, we are a digital product consultancy based in London. And since our founding, we have designed and built compelling digital propositions for some of the world's biggest brands. And this has provided a privileged front row seat to a quiet revolution in financial services as it converges with customer experience. And today's webinar is all about mastering embedded finance and giving you a strategy for success. And today we'll be covering where we are on the embedded finance journey, what's possible with embedded finance, how to build the right proposition for your business, and most importantly for your customers, and how to start taking action. And we have assembled a fantastic panel of experts, and I'd like to kick off by saying hello to our panelists today. So please, can you all introduce yourselves? I'm starting with you, Pearse.
Great, thanks, Jimmy, and hello, everyone. My name is Pearse O'Flynn. I take care of global vertical strategy for Adyen for platforms, focused primarily on our food and beverage, beauty, wellness, and hospitality verticals that we have, and certainly very much looking forward to the conversation today. To share a little bit about who is Adyen and what we do, we're a global financial technology provider who works with some of the largest enterprise brands in the world, the likes of your Spotify and Microsoft we would work with directly. But we also provide financial technology for SaaS platforms and businesses to offer financial services within their own offerings. So think of your Lightspeed and eBays of the world. We operate in over 100 countries globally, and we just processed north of $1 trillion annualized processing volume across our ecosystem. So certainly very excited to have the conversation today, and certainly looking forward to talking about all things embedded finance within the space.
Brilliant. And over to you, Ryan.
Hello, I'm Ryan Garner. I'm an independent product and growth expert, which means that I work with businesses to help them design, build, and launch new fintech businesses mostly, but that does move into tech businesses and non-financial businesses, as we'll start to understand with the embedded finance discussion we're having today. In addition, I also work with kind of mid-size fintech businesses on their growth plans in many places around the world, including the UK, US, and Asia.
Brilliant. And John?
Thanks, Jimmy, and hello, everyone. I'm John Godfrey, Commercial Director here at Red Badger. As Jimmy mentioned, we tend to build compelling digital propositions. So whether they're brand new propositions, unlocking new profit pools, or they're renovating or fixing existing ones, or even extending into new customer segments and new markets, Red Badger's been doing that across retail, finance, media, services, and platforms for the last 15 years or so. And pretty much across all of it, it's there to capture new value. So we really see embedded finance as the next wave as finance converges with customer experience. So really excited to be here.
Great, thank you all. So let's just get started and go back to basics. What do we mean by embedded finance? And Pearse, I'm going to hand this over to you to kick us off.
So at Adyen, we think about embedded finance as when payments and financial services are integrated deeply within a SaaS platform. And ultimately, that SaaS platform's brand and ecosystem govern the offering of these products to their customers. And from an end user perspective, it means that they can go to a single provider to get both software, payments, and financial services from a single vendor. But when we think about the actual products and components it's made up of, we think about embedded finance as payments, as capital loans, bank accounts, and embedded issuing of cards, all collectively within a single offering. And being able to provide these to your customers enables you to create further value for them outside of just your core, maybe more traditional SaaS offering.
Great. And we know that the market opportunity is huge. I know Adyen's latest research with Boston Consulting Group is projecting the embedded finance opportunity to amount to $185 billion by the end of the decade, with less than 20% of the market currently addressed, which is leaving significant room for expansion. So I suppose building on that point and handing over to you here, Ryan, where are we on the embedded finance journey? Because we've talked about, I know people talk about wave 1, wave 2, wave 3. Could you just give the audience a sense of where we are?
Yeah, of course. So embedded finance has been around for many, many years now, which means that we've moved through various phases of adoption. And, you know, the early adopters of this, the kind of wave ones, were the big techs. So the likes of Uber and Amazon, Apple, Shopify, the list can go on. Many brands that people will be familiar with and that use every day. And these are non-financial brands. These are retailers, these are tech companies, these are transport companies that have embedded financial products within the core of their product and their customer experience. We then started to see wave 2 emerge, where digital-only SaaS businesses started to realize the benefits of this, and you didn't necessarily need the budgets of an Amazon and an Uber to be able to integrate these products because the embedded finance technology has evolved and become much more cost-effective and easier to embed. So companies like Ben, which is a employee benefit company, Toast, payments provider, EPOS Now, there's a long list of digital-only SaaS businesses that are in this space and have done very, very well over the years. And where we are right now is that we're in this kind of wave 3 space where every other business really, businesses that are kind of been around for a long time, likely have offline businesses as well as online businesses. But the key characteristics of this wave 3 is you need to have a large customer base, because ultimately you kind of boil embedded finance back down to its core. All it is non-financial brands acting as a distribution channel for banking products, for financial products. And so if you've got a large customer base, if you handle large volumes of transactions, if you have high customer engagement, you've got a great opportunity to open up new revenue streams, improve customer satisfaction, create these really slick end-to-end journeys for your customers, and unlock a whole new set of value and growth, which is where we're seeing a ton of innovation right now in this wave 3 space. So that's the kind of progression of the journey we've been on right now. And you can see in the news as well, just reading the news over the past couple of weeks, you've seen retailers like Currys and John Lewis revamp their payments products, and that's in the retail space. And there's retail is the obvious choice there, but we're also seeing interesting businesses like Checkatrade with this kind of marketplace dynamic, where they're connecting people that want tradesman services and tradespeople on two sides of a platform, embed financial products in the middle of that point of transaction, and really enhance the value on both sides of the market there. So really interesting developments over the past few years.
Great. And I sort of listen to a lot of podcasts and tune into webinars about embedded finance, and you often do hear these examples of Uber and Shopify, who are obviously the early adopters. But what about much smaller platform businesses who might be at a much earlier stage of growth that, as you mentioned, Ryan, don't have the significant budgets that an Uber and Shopify has? Is embedded finance still relevant for them? And Pearse, I'll hand this back to you to answer.
Absolutely. And I think to add to what Ryan said there, we're at a really exciting time in the embedded finance space, particularly because it's now possible for these smaller platforms to offer these services without all the complexity and overheads that traditionally existed with needing to have a banking license, needing to have a financial license to offer these types of products. There are now options available that smaller platforms that don't have full banking teams, fraud teams in-house can now offer these types of services. And it's no longer just reserved for those multi-billion-dollar type companies that are out there. And a really practical example of that for us here at Adyen is We worked very closely with one of our customers, EPOS Now, over the last number of years, and they traditionally were a legacy, not legacy, but more POS restaurant SaaS offering, where they offered a great POS solution, but now they've been able to actually expand on their offering and expand into multiple markets, partnering with us to now offer not just embedded payments, that's the baseline, but also bank accounts, issuing of cards, and also capital loans to their customers to create even more value for their product offering, and ultimately offering their customers products and services that they were already getting from other places. Their restaurants and convenience stores and retail locations they were working with are already obtaining loans from different sources in other ways. And now EPOS Now can offer that directly within their own solution, making it much easier for their customers to operate their businesses and ultimately grow their businesses with these financial products.
Great, that's a really, really lovely example. John, over to you. Can you share an example of one of the best use cases that you've seen?
Sure. I guess what we see is, where does adoption come from? And I guess as Ryan talks about, the customer desire exists. So if a customer is in a checkout journey and they're unable to afford initially, or we're looking for some easy funding options, then a buy now, pay later option is a really easy way of seeing the kind of customer journey that's possible. As we extend that into the platform places that Pearse is talking about, that could be some trade financing or some opportunity to unlock funding based on my invoicing. So we see adoption because it comes from usability and affordability. I guess for me, it's where it becomes viable for the businesses to offer it. And I guess for business viability, it's always follow the money. Where is the money flowing for the kind of opportunity that we're talking about here? And for me, that's always private equity seems to be pretty good at spotting where those trends are. As you look at adoption curves, I think looking at where is private equity focused, what are they up to? And you can see cases as the marketplaces that Ryan's alluded to, where private equity investment thesis are take a large customer base and monetize through offering new services and new propositions to that base. We also even see these private equity roll-ups where they're purchasing and bundling together a group of, say, SaaS businesses that are offering software and mission critical ways to run really small SME type businesses, whether accounting firms or laundry management, but they bundle a whole group of those companies together and then provide an embedded payment service to those group companies as a one-stop shop. And I can see that's already happened with Aqualine, full steam out in the US, and we can see those kind of behaviors starting to show up in Europe.
Very good. And just building on from kind of following the money, Pearse, I wondered if you could just give us a sense of how businesses can make money out of embedded finance and just give us a bit of a sense of the practicalities of the commercial side.
Absolutely. And look, that's why this is so exciting. There's multiple ways in which you can generate additional revenue for your business through offering additional financial products. And we're going to take a quick look through the 4 different components that make up this focus. So number 1 is payments. If you're embedding payments into your offering, it gives you the ability to generate a margin on the delta between which you buy payments from your payments provider and you resell that to your customer. So for example, with us and a customer like EPOS Now, we provide the financial technology for payments to EPOS Now, and EPOS resells that on to their end customer, and they can generate a margin in between that delta. And we see that the proof point of this within the market is, if you look at the likes of successful platforms like Lightspeed and Toast, they're generating over half of their revenue from just payments alone through offering both the software and the payments as a single solution to their customers. But that's the baseline, and that is the foundation for generating the first line of revenue that you can generate. The second, however, is through embedded financial products, like we mentioned earlier, of capital loans, issuing of cards, and business bank accounts. So for capital loans, you can offer a loan to the end user through the platform and ultimately collect a fee on that loan that can be both revenue generating for you and your payment provider, and ultimately creates value for your end user where they can get quick access to capital and working capital. In most cases, it can be available same day or next day into their existing ecosystem. You don't have to go and apply for a separate loan or do a credit check. It's all available within the existing environment, and the platform can generate revenue from that loan. When we think about business accounts, being able to offer business accounts to your customers, any funds that are held within that business account can generate a return from interest, and the platform can benefit in the gains from those funds that are held to ultimately grow further revenue streams within the business. And on top of that, you can then issue a card. And when you issue a card from that account, you can then generate revenue from the interchange and the revenue that's generated from the spend on that card every time the end user uses that card. So a really practical example of this is we'll use the food and beverage space. I spent a lot of time in this space, but if you think about the example of a restaurant needing to purchase goods from their supplier, if they use that card to purchase those goods from the supplier, the platform can generate revenue from the interchange that is earned on that card spend. And in many cases, those cards are issued with commercial interchange rates. So it's the high rate of interchange, and it can be a very meaningful way to grow revenue for the platform. And in recent research we've carried out, we can see that you can up to 3 and 4x the revenue that you can generate from just your SaaS with embedded payments and also embedded financial products. And really, what does this mean when all of these pieces are working together? You can create balance in your revenue streams and ultimately diversify the revenue streams you have within your business so that you're not just relying on 1 or 2. You can now balance 4 to 5 different revenue streams that you can have within your business to protect yourself and your growth long term.
Super interesting. That's a really, really good summary there. Thank you, Pearse. So super interesting to learn about the financial side and the benefits of embracing embedded finance. I'd now like to sort of talk about the customer and merchant experience. And John, perhaps you can take this one and just give our audience a sense of how can embedded finance improve both the customer experience and the merchant experience, and why the urgency to move now?
Yeah, I think it's building on what Pearse has just covered, that customers are going to migrate to wherever it's easy, it's useful, and it's affordable. So if those opportunities and offers are put in front of them, say within a journey that they're already involved in, say a digital journey, as long as that's enabled, the customer's going to flow there. So what we're beginning to see is that the disruptors, those businesses that are able to inject that offer into these existing customer journeys, they're winning that business. And so that offers a competitive threat and a kind of reason to move to anyone who has an existing customer journey, whether that's retailing, whether that's some multi-sided platform, or whether that's a services proposition. But the idea of packaging all of those financial products that are available on these platforms and offering them in journey is really critical, and really offers a whole bunch of value props to the company serving it. So as Pearse has mentioned, the cost of acquiring can be balanced against all the other profit pools that are now available. I think you can reduce churn immediately, so you create stickiness with your customer base. But I think we're also seeing things like the opportunity to open up new acquisition channels. So where, for instance, you might be an accounting first kind of flows, you could offer a banking first flow as a way to engage and onboard customers initially. So particularly as embedded finance becomes increasingly used in small and medium businesses who already hold some level of business workflow, then the opportunity to make this really seamless and really easy at the customer point makes the customer acquisition and the customer stickiness increase. At the merchant side, of course, if you're a platform that supplies to those small and medium businesses, your job now is to become an enabler. So the whole process of what you do, where you used to just deliver your single line of service, what you can now offer is enable that line, your customer, to do better business with their customers. So it's this B2B2C. So are you being the best possible enabler of your customer's customer? And so I think all of these together are what's driving both the urgency and this experience first approach.
What John has just talked about, I think, is really, really important in the current economic climate. And I think if you think about what happened post-pandemic, the kind of tech world, business world went through a bit of a boom, right? And it acquired a lot of customers. And then over the past couple of years, customer growth has slowed down. There's been a switch in focus from growth to profitability. And so what John is talking about and what Pearse is talking about, opening new revenue streams, improving the customer experience. When you improve the customer experience, you're able to drive engagement. And so your customer is not just landing in your product, becoming dormant or inactive. You're actually driving that engagement through creating stickiness through essential services like financial services. And what we know by doing some analysis on some of the wave one companies like Uber, who we mentioned, is that as soon as you drive multi-product usage, your customers spend 3 times as much as single product users. And that is super critical. I can't underline the importance of that enough in the current economic climate, where profitability is the core focus. How do we drive down CAC? How do we increase profitability of our customer base? And embedded finance is a really, really good way to do that.
Pearse, do you want to build on that just in terms of the Adyen conversations that you have, particularly when speaking with prospects?
Absolutely. I think where we see this working really well is where platforms are offering a platform and a service which is tailored to their customers. So we see a lot of success here within the vertical SaaS play, vertical platforms play, and ultimately they're meeting their customers where they're at. They know that they're already getting these functions and services from other places. And where we see platforms doing really well today is when they actually go a step further and say, what are all of the tasks and activities that my customer is doing? And how can I help create more value in operationalizing and streamlining those different tasks and activities with embedded financial services? So when you think about that supplier payment ecosystem example I shared earlier, being able to just make that so easy for your customers so that they can pay easily, they can reconcile easily, and they don't have to deal with manual invoices and reconciliation at the end of the month with their accountant or tracking down that missing payment. Being able to remove that complexity completely from the example enables them to save time and ultimately, to Ryan's point, lower costs and operational costs of running the business. And it all creates this value that you can't get when you have a separate payments, separate bank, separate software, separate all these pieces together.
Yeah, that's really lovely. And I think it's really clear that customer experience, merchant experience, is super critical to having a successful embedded finance offering. I'd like to just build a bit further on this then. So we've talked about being up to 3 or 4x your revenue. We've talked about the customer merchant experience. Ryan, perhaps you could give us a bit of a sense of just getting started and how businesses can look to build the business case, get the business aligned, and get them on a strategy that the business is fully committed to.
Yeah, the first thing to say is that this is no easy undertaking. You need to have the leadership team fully behind this. You need to have buy-in from the top. Because ultimately, whilst this has become like a lot easier than it was, 3 or 4 years ago, you're still impacting the core product. You're still impacting the customer experience, how customers interact with your business, and all of those sorts of things. So it needs buy-in from the top. And the way you do that is to build a very strong business case. And there's a very, very kind of formulaic process for that. It's not any different from any other business case you'd build, just because it's embedded finance. But you do need to go through that process. You do need to understand what the problem is you're trying to solve. And that problem could be as simple as, we've got a product, people sign up for it, but then they leave the product to go and sign up to a bank account somewhere else to be able to use this product, or to get some credit so they can then buy the thing that we're selling. If you're seeing that, that's a problem in your customer experience. Identify that problem, figure out the solution, figure out the commercial model behind it, that desirability, viability, feasibility triangle that you typically go through in any kind of new product development process. And then think about how you kind of piece that together. It's not just the product that you're building, but it's the go-to-market, it's the proposition. How do you communicate that to the customer segment that you're targeting with this, and have a very kind of realistic and sensible mobilization plan. And as I said, get the full executive behind it, get a team behind it, and get them to commit to it. And I think that is ultimately the starting point from which you can start your journey on this. And there are a ton of examples out there right now. And whether if you think your business is in the wrong industry, like, just chat to one of us and just message one of us, and we can give you some examples of where you might see examples in your industry of businesses doing this already to great effect.
Right. I think it's worth spending a bit more time on this point, actually, because you've spoken about how it's not easy and that you do need buy-in from the top. Pearse, I wondered if you could just give from your conversations with prospects and your merchants at Adyen, what do you see as the key indicators for success?
Really, to double down on what Ryan is saying there on the organizational buy-in, it is key to have that at the offset, and we see platforms with that level of commitment to this being a meaningful revenue stream going forward, having the most success. Where we don't see this working as well as when they see it as a side project. Let's test this out. Let's see what works, and we'll build a go-to-market motion around it if it works. Actually having commitment around how meaningful 2xing and 3xing your revenue can be for the business creates that level of buy-in with actually investing in launching these types of products. And a key piece of that as well is making sure that you look at the right partner that you choose to offer these types of products. So we're working with a partner that can support you from a financial license standpoint, can help guide you and help you structure your strategy, and ultimately has the right products you need that are flexible in order to be able to offer your solutions. And platforms that can completely white label and own this experience and make it look and feel exactly like their own brand and ecosystem do really well in this space. But some of the kind of main pieces of feedback we often see in this space are that number one, which is, my customers aren't necessarily asking for this. And we definitely see that as something that we hear a lot. And the response to that really is they don't necessarily assume today that they can get these types of offerings for their platform. And they go to more traditional routes to get types of embedded products. And being able to actually offer these and communicate these generates that level of interest and ultimately changes that perspective to say, oh, I can actually go to my platform now and get a business account, or I can go and get a capital loan there. And that makes it a whole lot easier for them. And I think when we think about one of the other areas we hear a lot is, why would this be successful for me? And will this be successful? I'm not a bank. And that's where we can look to a lot of those proof points that Ryan and John have mentioned in the market of we've already seen success in this space. And, with platforms that are not your multi-billion-dollar platform out there, they've been able to successfully understand their customer, embed these products deeply within that journey, and now are seeing what I mentioned earlier, around 50+% of their revenue coming from these coming through these products, and the proof points are there in the market.
Great, and I'd like to build on the point around customers not necessarily asking for it. But first of all, we have a brilliant question which has been submitted, which is how can you measure the ROI of embedded financial services? Are there key success metrics?
Yeah,
Who would like to take it? You go, Ryan.
Let me start, because I think there's some very big, broad categories you should look at. One is, if you think about building a ROI case for your business, firstly, you've got to look at the new revenue streams that you'll open up. And Pearse did a really nice breakdown of that earlier in the conversation. Secondly, you need to look at the impact on customer lifetime value. If you are able to keep that customer for longer and serve them with more products, that customer is going to be worth more to you over time. Thirdly, you need to look at customer retention numbers, and you can look at any kind of metric here. Like, for example, it was interesting to read in the information that Currys put out the other day with their new FlexPay product. they see NPS being 22% higher compared to their non-credit customers, which is super interesting, right? Because you're going to be keeping those customers coming back to you more frequently if you're improving the experience for them. So new revenue lines, customer lifetime value, customer retention, customer engagement, all of these sorts of things will have, or using embedded finance will have an impact on these metrics. And I think the key to answering that question is to look at what type of business you have and the engagement points you have with your customers already, and how that might change by introducing embedded financial products.
Great answer. Did you want to build a bit further, John?
I was going to build a bit on there's definitely a part which I think that question, Ryan's answer, is around how do you align senior stakeholders to do embedded finance, to take it seriously, to align the organization around all of those benefits. And there comes a point for all businesses that commit to it, at the point at which you say, okay, we're going to do this thing, and you have to define what this thing is and how that changes your customer experience. So I wanted to expand a bit on the kind of in life, how do you ensure you're achieving ROI as you're building and deploying new customer journeys, new propositions into market? It won't be a surprise for you. We build these kind of products, new digital products for complicated places. And in doing that, there's an approach to it that is very much avoiding a project-based approach. So traditionally, things like integrating a payments method could be treated as a project. You have to offer payments if you're a retailer, and you consider payments as a project that you need to get done. And if you want to upgrade or change your payments provider, that can be a project that has a start date and an end date. But I think there's an approach to take with embedded finance, which is much more product related, which is about changing the offer and continuously monitoring the value that you're delivering to your customer, whether that customer is a merchant or it's their customers. So once your ROI model is built, business case is there and you're aligned, we would advocate for a North Star type metric. So a measurement framework that said, this is the value that we're looking to unlock. This is the business case that's behind that value. But how we go about doing that is then ensuring we're delivering the kind of products and services into customer journeys and continuously monitoring and improving and optimizing those journeys such that you're really confident that you're continuously unlocking that value. And that fits really nicely into what we can see as an adoption curve that starts at payments and progresses through to these ever more valuable, higher ticket financial products. So I think there's a nice alignment between the ROI you set out to achieve and then your in-life work towards maximizing that.
And just to build on that a little bit, completely aligned with what both Ryan and John said there, and what one of the great benefits of some of these newer embedded financial products is that there's proven business cases already out there of how you can achieve this. And if we look at the likes of a capital loan, being able to offer a capital loan, you could assume a percentage rate of customers that would take that loan and then calculate the fee that you would ultimately generate from those loans. And one of the areas we see the most exciting part here is when a customer and an SMB takes a loan, 80% of the time they take it again and again and again. And you can start to prove out this model where not alone are you generating the fee one time on the first time they take that working capital, but you can now start to map this out over time, and very quickly you start to pay off the investment that you make in the space, and really working with your partners as well to make sure you're really clear on what that opportunity looks like can be very helpful. Your partners will help you in this, in understanding, you know, are you thinking about the right pieces of the business model when ultimately offering these products?
I think it's fascinating that that approach to evolving over time. And there's a really trite phrase in the product world around making things people want is a much more powerful way than making people want things. In the old days, we would manufacture a thing, whether that's a credit offer or whether it's a physical item, and then we spend lots of money on marketing, and we build marketing plans and weight and sales plans to kind of sell that thing in market. Whereas I think what Pearse and Ryan are describing is Just give your customers the things that they want. That will then create a value flow back to your business. I think that's a really neat way to be thinking about it.
That's great. And John, I think you've touched on this already, but how do you know if this is something that will ultimately deliver value for your customers?
There's definitely some kind of key metrics, ideas, circumstances, conditions, if you like, that will tell you this is something you should be doing. So Ryan mentioned one. If you've got a large and active customer base, and that customer base is transacting in any way, either with your services or with other partners, that's already a really rich environment in which there is value to be had. There's a bunch of other conditions where it's going to apply. I guess for you as an organization considering it, the how do you know is the combination of the business case that you build on day one, that's built on all the assumptions and all the things you can see in your research. In a product mindset, we would start testing very quickly. So rather than making a project-based decision that says it's 2 years before we go live, you would go live as quickly as you possibly can with a minimum product set that delivers some value to a customer set, and you'd be testing that with customers quickly. Pearse's platform and Adyen that comes with everything that Pearse has described out of the box. So there are components, there are banking licenses, there's pre-built ways to very quickly get to payment flows and to do that for your sub-merchants if you're selling, if sub-merchants are your core business. As you do that, then you're generating value and you're learning which pieces are your customers most interested in. So you're getting immediate feedback while you're generating value. And then for me, it's a continuous everything. So you continue to uncover and discover what your customers are looking for. You continuously deliver value. You continuously improve, evolve, and develop your customer journeys and the service and offerings that you can provide.
And just, yeah, I think, taking the product mindset into the embedded finance offering is really clear. Yeah, sorry, you go, Pearse.
I was going to say, just to add to that, I think it's really important to think about that in the lens of the organization as well, and the team structure. Having someone who is dedicated to thinking about these products, not just in their inception, but how do we grow them? How do we grow adoption? How do we evolve them and add more products like this? Having someone within the organization who is thinking about that all the time, both from a product delivery standpoint, but also a commercialization standpoint, can really help, because it isn't then just that one-time project, as John mentioned, but it's an ongoing responsibility for someone or some team within the business to actually own that revenue line and make sure that it's successful.
Great, thank you. I'd like to just move on now, just talking a little bit about some of the barriers and how businesses can look at overcoming them. So OpenPaid carry out a survey every year, which is all around Europe's embedded financial future. And they surveyed 150 companies to look at what barriers are essentially in the way. And limited internal resources was the main reason that businesses are holding off. So 73% of those 150 companies cited this as the main barrier. So if I'm a business exploring embedded finance, but I've got limited internal resources, be that capacity or capability, how do I go about setting up a roadmap for success? Ryan, perhaps you could kick us off on this one.
Yeah, I mean, the barriers, some of them are very real, but some of them are a bit more, I guess, psychological. It's like, well, we're entering financial services. Financial services is a regulated industry. It has a ton of risk. It has a whole load of compliance related requirements. And that can feel very intimidating, especially for a non-financial services business to move into. But what you'll find today is that a lot of embedded finance providers, just like Pearse and his team at Adyen, will simplify a lot of that for you. And so whilst you will have to build in some capability that deals with some of the complications of this, a lot of it will be taken away from you and will be dealt with by the products and services offered by your embedded finance provider. So that's the first major thing I would say, is that just realize that there's a ton of help that can overcome a load of extra capability and skills that you don't necessarily have in your team. I think the next thing is then to realize that there are a lot of people out there that can help you. There are now a lot of people in the market that you can hire from financial services companies, either like big banks or fintechs or companies that have been operating in this space. So there's talent out there. The talent pool has developed. This is really important for an industry as it evolves. This is not a nascent industry anymore. This is not kind of 2014, 2015. You know, we're 10 years on from that. So the talent pool has emerged and it exists. So you can hire people into your team. If you think you've got enough people in your team and actually you need just a short-term piece of work, then there are agencies and freelance consultants and all sorts of specialist providers that can come in and help you make that transformation internally. So that's number two. Number one is don't feel intimidated. It's not as complex as you think. There's a ton of help out there. Secondly, the talent pool is big, and there's agencies and consultancies and freelancers that can all help fill that. And then thirdly, sometimes, and we've been talking a bit about the different waves. It's okay for an Uber to go and build an embedded finance solution because they've got a whole load of engineers and tech talent in the team. Maybe your business has not even made much of a shift to digital. And that can be a bit scary then, because then you're making it feels like a couple of jumps already. You're going, well, we've not done digital very well. Let's go into embedded finance. And all I would say to that is that there is, again, like a lot of support out there and a lot of examples of how non-tech businesses or non-digital businesses have leveraged a lot of their core capabilities within their business to make that jump into embedded finance. So yeah, I guess that's where I would start.
Great. And John, just passing over to you, I think another fear cited is whether or not customers will adopt the product that they build. So how should businesses go about overcoming that concern at the beginning of their journey into embedded finance?
Yeah, I think it's a valid one, and one that is hard to know right at the top. Are you going to be able to test that without actually putting something to market? We're big advocates of putting real product offer into market, understanding the response to it. I guess the 4 steps summarizing some of Ryan's work is still valid. One, you need to find a focus and pick one of your customer offers, one of your customer segments, one of your journeys, and decide that's the thing you're starting with. Pick a platform to build on, and that should be one that fits the criteria for now, next, and later. So it's one you can build on. Once you've got platform and focus, then set some outcomes for it, which I guess is the heart of the question. How do you know you can achieve those outcomes? And then mobilize the right team for doing it. And that team might need some priming from some external expertise, as Ryan's described, or it can be your own internal team. But I think there's a priming piece that will accelerate that time to knowledge and therefore time to value. So if that's the kind of 4 steps of how, I think the 3 principles to bring into that, we've touched on all of these, kind of answer the question. So one is get to money flows quickly. You're doing this for a reason, and the reason is embedded finance. That offer is being taken up by your customers. So you do what it takes to embed payments, for instance, is the really easy way to do that. So what's your path to get money flowing? Make no regrets decisions around technology, platform, team even. So aim for a composable architecture. Don't interrupt your existing flows, particularly customer flows. You can build in parallel alongside. You don't have to integrate on day one. So integration might come later down the line, but you can build new propositions alongside your existing flows. And then let the market demand shape where you go next. And I guess that answers the question as a principle is, if you put something in market, and for all the reasons we've discussed around maturity and adoption curves, that's easy. It's way easier today than it's ever been continues to get easier. So get something in front of your customers, learn from that process.
Fab. And we've got another great question which has come in, which is, in what ways would you adjust the pitch for these financial products if your customer base is a mix of SMEs and enterprise customers?
I think
it's got your name on it.
Yeah, all good. I think what's really important there is to make sure that you really clearly segment the customers that you're going to offer this to, and ultimately what their needs are. You know, for many large enterprise end users, they may already have well-established financial arrangements with their bank. Maybe they have mortgages and loans already tied up in the multi-millions of euros or pounds. They may already have very attractive arrangements if they're large enterprise organizations, and they may be financing other parts of their business in many ways that exist. And where these types of embedded financial products work really, really well is in that more SMB mid-market space today. So segmenting your customers and understanding who sits within each of those segments and talking to them, understanding what are their needs, what are all the jobs to be done that they're carrying out on a day-to-day basis, and how you can ultimately solve for them, is how I would think about segmenting it up. Because being able to be really clear and articulate about the segments that this will resonate the most with, and where you can actually get that ROI, and running the calculations and business model on the segments that you feel it will solve the problems for, is key. Because you won't be able to do it all day one, but being really focused and targeted as to the segments you can go after can help you be more realistic, I think, with the buy-in of leadership, and ultimately get going and get results faster.
Great. And then just a final question then on overcoming barriers and resolving barriers, because we talked a bit about resources in terms of capacity and capability. We've talked about ensuring that we build a product that customers actually want. Ryan, perhaps you could give us a bit of a sense of how to overcome some of the internal and stakeholder barriers that individuals who are trying to push this forward in their businesses may come across.
Yeah, absolutely. I think, you know, you've got different capabilities and different people heading up different teams internally. So, you know, typically this is going to touch your product teams, your technology teams, and your marketing teams. And you need to get alignment across those three. You know, we talked a little bit about getting buy-in at the top. This is the kind of next, like, you double click on that. What does that actually mean? Well, that means, you know, your chief product officer, your chief marketing officer, and your chief technology officer having a clear understanding of the implications of building an embedded finance product has on these teams and on the business, and how these leaders in your business are going to support that transformation. Because if you're talking at an enterprise level, if this is a big business, this is a transformation piece. It will impact a lot of areas of your business, and so managing that transformation will be important. And so getting those three core, and there's more people, of course, but like those three typically are going to have a very, very big impact on this. And then really it's just having a plan in place, a really solid plan, key roles and responsibilities, dedicating budget and people and resource to this. You know, as I think John mentioned earlier, you know, this is not a side of desk thing. You need to commit resources to it. And as soon as you have that buy-in at the top, as soon as you've got alignment amongst the key people in the leadership team, and you've got dedicated resource and a key plan around this, you know, I think you're in a great position. You know, there's a lot of companies that struggle to get that far. So if you can get that far, you're doing a really good job. And, you know, I think you'll find a lot of momentum start to build.
Lovely stuff. We've got about just under 10 minutes left, so I just want to move the conversation a bit to talking about the future. And Ryan, this is going to be another one for you to kick us off with, because you talked very eloquently about moving from wave 1 to wave 2 to wave 3. Perhaps you could just give us an idea of the next milestones, you know, the direction of travel, getting your crystal glass out and sort of giving us an idea of what trends we can look out for over the next sort of 5 to 10 years or so. Yeah.
So the evolution, you know, we'll start to see wave 4s, 5s, 6s, all the way down the line. It'll get a bit silly in terms of categorization. But what I'm most excited about is embedded finance having some really high profile examples in that wave 3 outside of retail. Because retail is the obvious starting point for all of this, because you can inject like a buy now pay later or an installment lending product at the point of need at a checkout process. You know, it's a very obvious one. We touched a little bit on these kind of marketplaces. I think the B2B space is fascinating. It's fascinating. But I also think there's a really big untapped opportunity in like the entertainment space, especially related to digital wallets, mobile wallets, which, you know, are, if you look at any payments report right now, you'll see that mobile wallets are dominating share of transaction volumes. Now, obviously, there's credit cards that are in those wallets, those mobile wallets, but mobile wallets are becoming a new interface for customers on their mobile phones, generally speaking. And that's not just payments. That's, you know, ticketing. That is access passes. That's airline passes. That's lounge passes. That's all sorts of things. And I think embedded finance then becomes really interesting when you start to think about a future of financial services connected to a mobile wallet that's just always there. And so you think about entertainment and the future of accessing festivals, music festivals, about sports events, about all these sorts of arenas where you wouldn't typically associate embedded finance, but actually there's really, really strong customer relationships between a supporter of a football club and the football club. You know, you might be a season ticket holder. That's ultimately a subscription. A subscription needs to be paid for, and you know, you can embed all sorts of financial products within that. And that becomes super interesting. People struggle to get festival tickets every year because, you know, they're in demand. Like, what does the festival subscription look like? And how do you improve the festival experience by buying kind of upgrades to that festival experience pre-event? You know, all of these sorts of things can be enabled by embedded finance. And I think, you know, what we've talked about today is just the start of where this goes. I think the experiences that it can enable over time and the deepening of engagement and the relationship between the customer and the company is really, really exciting.
Great. Yeah, I like the idea of us coming on and doing the same webinar in 2 years' time. Ryan, we're on wave 14 now. So that's where we are. But no, it is exciting, and thank you for giving us that. So thank you all so much for your time. To close with, I'd love for you all just to give the one key takeaway that you've taken out from this conversation today. Pearse, I'll chuck over to you first, if that's okay.
Absolutely. So I think for me, it's one that, you know, we see so much as we talk to customers and even talk to folks externally as well, but rallying around and committing to these new revenue lines is key, in my opinion, to making this a success. And being able to bring together the value you can drive for your customers, the revenue you can drive for your business, and ultimately the future growth that you can have for your business in terms of maintaining long, happy, and profitable customers is where I get really excited. And being able to really rally the organization around that opportunity that's ahead and get excited about it is one key takeaway I certainly have coming out of this conversation, and I hope others do too, on the importance of that and getting that and the foundations right will enable you to just build much more effectively and have a long-lasting product and hopefully very happy customers.
Fantastic. Thanks, Pearse. John, why don't you go next?
Yeah, I think it's in a similar space, really. It's the move from what was a project-based approach where you have to integrate payments, for instance, because it's a necessity to take funds, into a product line. You can't bring the vision Ryan's just laid out. Imagine that Wave 14 fan experience that starts for a Man United fan who lives in Michigan. and is coming through the airport and is recognised and is fully integrated in venue, out of venue, across their interactions with influencers, across social channels, has loyalty baked into a wallet experience that doesn't even need an app. So building that from a technical perspective is a solved problem. The technology to do that exists. Interestingly, so does the embedded finance requirements and the platforms and the licensing and the compliance requirement that allows you to do it as well. The piece that isn't solved yet is the business integration that's required, because we still treat checkout as a checkout process, and there may be a head of checkout, and we think of payments as a payments process, and there's a head of payments, and loyalty is owned by marketing. So I'm really just interested in how do we solve for these really complex, fully immersive, omni-everything experiences, and do that inside our businesses such that we can enable value. That's the bit that's
Great. And Ryan, to close?
For me, it's the thing I'm most excited about is the improvement in customer experience. I remember back in I think it was about 2016 when I first downloaded the Monzo app and opened a bank account pretty much instantaneously. And it was like a massive wow moment for me. Now that is like expected, but that's not expected in places like where, you know, if you're going to get a spa treatment somewhere, or, you know, in your provider of spas, like, you need to accept payments, but you also need to put that money somewhere. So open a bank account immediately on that platform. Those customer experiences are just going to become very, very common. And you're not going to be opening bank accounts typically at your local branch, wherever you are, whether you're a customer or an SMB or an enterprise. And I think that's super exciting. I think that's really exciting, where you get these end-to-end journeys that are just tightly sewn together and that are not fragmented. You're not having to go from one place to another and have the hassle of doing that. It's all going to be in one place. And I think for me, that's a really exciting future.
Yeah, super exciting. Well, thank you so much, Pearse, Ryan, and John. It's been an incredibly interesting conversation. I really appreciate all your time and effort put into this. And thank you to everyone who's joined live, and to everyone who's watching this on the catch up, and for those who submitted their questions. It's really helpful in getting the conversation moving. I know that we mentioned when we were reaching out to you and inviting you to join the webinar that we are offering everyone in attendance a free in-depth exploration workshop with Red Badger and Adyen. Please do take us up on this offer. We'd love to get involved. We'd love for you to spend some more time with Pearse, Ryan, and John on the teams, and really help you on your journey. And please do get in contact with Max. Max's email address is there. And if you'd like to have a further conversation with any of the panelists as well, then please get in contact with Max and he will arrange it. Thank you, and enjoy the rest of your afternoons.
Great.